pretty excited to share a great little strategy with you today that works on dollar-yen Forex pair. It's not a completely new strategy, and it's a strategy that, one variation or another, I've been trading since 2013. However, I've recently discovered a great modification to the strategy which actually doubles the performance. It doubles the net profit, and it increases the win rate, and it reduces the drawdown. So it's an overall really good improvement. And for those of you who like to place trades manually, you don't have automated software like I use, this is a great strategy to use, and the modification also requires no extra time to implement. I'm actually quite surprised how well this modification works. I've been trying different modifications to this strategy for years, and by far this one works the best. We'll very quickly run over the original rules to the strategy. The entry signals, they stay the same, and then we'll go over the modification. I'll show you exactly how to do that, and then we'll look at the results back to back. We'll compare the original ones to the ones with the modified entry, and then we'll fine-tune the modified entry even further to improve things more. First of all, let's have a look at the whiteboard, and I'll show you exactly how things work. Some of you might have already seen me explain the original rules to this strategy. So for those of you who have, please bear with me for a couple of minutes while I demonstrate it to those who haven't already seen it. And then we'll move straight on to the modification, which you probably haven't seen me demonstrate before. I've already mentioned we're looking at a daily chart of dollar-yen Forex pair. Now, as always, set up your charts so that the start of the session and the end of the session is around about 1700 Eastern Standard Time, and we'll have 5 daily bars per week. So the first thing we're looking for is the setup bar, and it's an inside bar. So this bar here is an inside bar. An inside bar, briefly, just means that the whole range of the bar is inside of the previous bar. So the high of this bar is less than the high of the previous bar, and the low of this bar is greater than the low of the previous bar. That makes it an inside bar. Looks very similar whether you're using a bar chart or whether you're using a candlestick chart. So that's our setup bar. That's what we're looking for. The moment we see that bar, we place a couple of orders in the market. We place an order to go long if prices break above the high of the previous bar. So these are going to be stop orders. And we also place another one to sell short if prices drop below the low of the previous bar. So it's a breakout determined by the high and the low of that previous bar. And we place these orders just as this bar closes. It's normally going to be immediately after this bar closes because Forex is a 24-hour market. So we put in our stop order at this level up here. This is our stop buy order, and we put in our stop sell short order down there at this level. So then when this bar opens here and prices might go down, they might go up, and they might break through this level, we're going to get in the trade, and then prices close up here. Now, with the original strategy rules, it was a day trade strategy. So the rules were get out at the end of the day, so here, so less than 24 hours. We want to wait for the bar to close, or just before the close. I normally like to do things around about 16:50, so 10 minutes before the market closes. And whether we're in a profit like this or whether we were in a loss, we just exit the trade. That was the original rules. By the way, stop loss area is the opposite end of the trade. So if, like this trade here, we were to go long, our stop loss would be down at this level here, and vice versa. If we're already short, then our stop loss for our short would be up at the high of that previous bar. If you want more details about the entry technique, then I'll link a free PDF that I created quite a few years ago now, and you can still get that. I'll link that in the description of this video so you can get those rules and go over at your will. And here's where the modification comes in. So forget about the timed exit at the end of the day. We're going to be using something that I picked up from Larry Williams, and something I've been using quite a lot recently. If you've seen some of my recent videos, you've probably seen me use it quite a lot. And it's Larry Williams Bailout Exit, and it works really, really well. Like I said at the start of this video, I'm surprised at how well this works, because I've been playing around tweaking this strategy for years and not really found anything robust that's continued to work, but this seems pretty good. It's dead easy to implement. All we're doing at the closing of the daily bar, so like this trade here, we'd just close out the trade. But now what we're doing, I recommend 5 minutes before, 5-10 minutes before the actual market closes, so 16:50, 16:55 Eastern Standard Time. We check, and if we're in profit, then we exit the trade immediately. So this trade here would be exited. If we're not in profit, then we'd leave the trade open. So that's why he calls it the bailout exit. You know, if we're in profit, just bail out, just get out with profit and run, wait for the next trade setup. It's that easy. If we aren't in profit and we haven't exited the trade, then we stay in the trade, and we're only going to get out when we get another signal to enter on another inside day. So it could be 2 days later, could be 10 days later, we're going to get a new signal to enter the market, long or short, and depending on the direction, that's where we're going to exit from this original trade. We're first going to look at results using data from 2008 through till the end of 2018. Then we're going to apply Larry's modification, tweak it even further, and then look at some out of sample data. Look at data from 2019 through to April 2021. That gives us over a couple of years worth of data to see whether our modifications are robust, to see whether they're continuing to work out of sample. So let's go over to the computer, see how it works, and see what the results are like. In this first workspace then, this is the original strategy with the original rules. Now, you might notice that I'm actually using a 10-minute chart here, not a daily chart. And that's because doing it this way, it produces a more accurate backtest. Now, I won't go into that now, but just take my word for it. That's why we're looking at a 10-minute chart, not a daily chart. And looking at the trades, we can see that we've got this end of day exit. See, exit end of day, exit end of day, end of day exit. Okay, so let's have a look at the results. We've got a net profit of 3.7 million. Max strategy drawdown of 658,000. This is in yen, by the way. We're trading 100,000 units. Equity curve is nice. For such a basic strategy, it's really nice. It's a really consistent behaviour, which is pleasing. We've got 536 trades, percent profitable of 51%, and an average trade of almost 7,000 yen. So next, let's have a look at the modified strategy. So now we're looking at the bailout exit. You can see that these same strategies, look, we're exiting at the end of the day because they're in profit. You see a green dotted line here shows that we are actually in profit, so we're just getting out the trade. We look back at some more examples. This one here, for example, we've gone short, and at the end of the day, it obviously wasn't in profit, so it held it, and we didn't exit until we had a new buy signal from this inside bar here. This is actually an inside day here, so we've got a buy signal here, and then we exit that long at the end of the day because we're in profit. So let's have a look at the results. Now we've got 5.5 million yen net profit, which is great. The drawdown is slightly more, 720,000. The equity curve is really nice. I'd say, if not nicer. I mean, it done well very early on in 2008, but then look, from 2009 onwards, it's very uniform. It's obviously working quite well. We've got 490 trades, so a few less trades. But look, the average trade's gone up to 11,000 now, so that's increased quite a lot. And our percent profitable has gone right up to 70% from 50 odd before. So that's really pleasing straight away. The next thing we're going to do is run an optimization on that profit number. I've mentioned that the bailout exit at the moment says, let's have a look at the end of the day, 5-10 minutes before the end of the session. Are we in profit? We get out of the trade. If we're not, we stay in the trade. But what if that in profit is not the best number? What about if we want to see that we're in profit by 20 pips and then we get out? If we're in profit less than 20 pips, then we stay in the trade. So we can optimize that number, see if there is a best area to look at. So that's the next optimization that we're going to look at. I've actually optimized from 0 to 100 pips. The numbers you see in this column from 0 to 100,000, that's actually the yen value. but it is from 0 to 100 pips in 5 pip increments. So looking down, as we increase the pips in profit we need to be before we exit, we see that a stable and the best number is around about this area here. We've got the highest net profit, 7,781,000. We've got the highest average trade at 17,000, that's much higher. And if we look, it's 45,000 yen or 45 pips. So what we're saying is we check at the end of the day if we're in profit by 45,000 pips or more, then we exit the trade. If we're not in profit by 45,000 pips or more, then we stay in the trade. So it's not 0 anymore, it's 45 pips. So let's see the performance of that 45 pip. We know that we've got that net profit of 7.7 million. We just saw that in the optimization report. The drawdown's gone up slightly again. We've got 913,000 drawdown now. Equity curve, very nice. Although it does seem to be leveling off recently, which is a little bit concerning. So look at the total trade analysis. 437 trades, a few less. Percent profitable has gone down now because we're waiting for more profit before we exit. Average trade we already know is 17,000 and it's very equal across the short and the long trades. But in terms of numbers, there's a massive increase over using 0. Using 45 pips does make all the difference. The only thing I am concerned about is that equity curve being slightly flat recently. And I won't show you now, but I did test, and interestingly, as you reduce those numbers, we're at 45, as we come down 30, 20, 10, that recent flat period does actually get better, like we originally saw with the number 0. It was still climbing very nicely. So possibly that 45,000 is slightly over optimized, but we can check that looking at the out of sample data next. We've got over 2 years worth of unseen data through this test that we can look at to see how the performance continues in the future. But just before we do that, if you're finding this video interesting and helpful, please give it a thumbs up now. Just before we move on to the out of sample workspace, I'll just show you the data period that we're working with here from the 1st of the 1st 2008 through to the end of 2018. That's what we've been working at in sample. And the out of sample data goes right up to the 30th of April 2021. So we've got 2 years and 4 months worth of out of sample or unseen data. Looking at the performance summary then, almost 9 million. The max strategy drawdown has stayed the same, so we haven't had a bigger drawdown in that out of sample period. The equity curve, so you see this flat period that I was a bit concerned about. It has continued to be a bit flat, but look, it has actually made new highs. So if we look on this chart, the green dots show us new highs, and literally right up until recently, it is making new highs. So possibly that 45,000 isn't over optimized and it will continue to work. So that's quite nice to know. Total trade analysis, obviously we've got more trades, percent profitable, 55%. Average trade has come down ever so slightly. We're only at 16,900 now. So to me that looks like quite a decent report, and I'm really pleased that we're making new highs. Out of interest, let's remove that 45,000 and let's put it back to 0, what we had before. I'm actually going to use 0.1 just because of the way I've coded the strategy. We need a value above 0 for this exit to actually work, and 0.1 yen is next to absolutely nothing. So it's as good as saying, are we in profit or not? Let's have a look at the report now. We're making less net profit than before, we already know that. The drawdown's gone down again, so that's good. Looking at the equity curve, that's even better. Look, that's really nice, and that's how I'd want it to look, so that's great. Total trade analysis. We've still got an average trade of 11,000, so that's really good too. And percent profitable is higher at 70%. So for those of you who are interested, let's actually go back to the original exit now and compare. We'll just give us one last look, looking at the equity curve. Average trade of 11,000. Equity curve looks very nice. Now let's change back to the original exit. And this is what the curve looks like with the original end of day exit. Not quite as a nice curve, but look, it is still making new highs, which is really good. Looking at the total trade analysis, average trade is only just above 6,000, which is a little bit low. This strategy has been underperforming slightly over the last few years, but using that little exit mod of Larry Williams, that really brings the average trade up to a much better strategy, in my opinion. The only thing we haven't looked at yet is a stop loss. In the old original strategy, we had a much better idea of our maximum loss because it was either the high or the low of that previous bar to the inside day. However, now, because we're letting trades run, we don't know where the maximum loss might be. We can look at the worst case scenario or the biggest loss of the backtest. We can use that for our position sizing. Or we can just look at playing around finding a decent stop loss level. I haven't done that in this video, but that's something that I will do. Let me know what you think about this little modification. Write in the comments. I really quite like it. And if I had to choose, I would probably use the 0 yen in profit rather than that 45 pips. You do give up a bit of profit, a bit of net profit, the average trade, but I just like that the curve is that much smoother. I'll continue to watch that, and I'll probably trade it quite soon because it's a strategy that I've traded for years now and I know it's robust. And looking at that modification, it doesn't look overfitted, or it doesn't look like we've over-optimized it at all. I'm actually quite confident in this strategy. The original inside bar strategy actually works on a few different Forex pairs as well, which is quite a rare thing. One strategy working on different Forex pairs. And I'll be trying this exit on those too. Let me know if you want to see the results for applying this exit on the others as well. Then that's something that I could probably share with you in a video as well. As always, I encourage you to do your own testing because it's a really good way of getting better at designing your own strategies and just understanding how the markets move. Anyway, that's all for this video, but I hope you've enjoyed it and found it useful. But until the next one, this is Jared Goodwin, and thank you.